Good day, ladies and gentlemen. It's Nongwell once again.
It's not a Thursday, but today is a Wednesday, and we're still talking about property investing. Quite excited.
So now today we are actually going to be having a special edition as we always do when we're about to have an event. We are going to have experts that are actually going to be talking to us about their fundamental advice that they want to actually give to you.
We're talking to the team about the foundation that we're creating, guys. At the end of the day, what we want to do is that we want to bring everybody in one place. We're talking about you, we're talking about the experts, so that after that event, you can have so much value that you have gained from that 3 hours. And most importantly, networking, because we know that not everything can be covered in the 3 hours. However, once you actually start taking the numbers off, these type of people can help you when it comes to building your property portfolio.
Most definitely. So now without wasting any more time, today's topic, man, I was speaking to Neo and I was like, you know what? Now we need to give our thoughts in terms of this whole conversation because we as property investors, I know we're always stressing the point that you don't want a second job, you don't want to be running around with your tenants and stuff like that, right? So you'd need a property management company. So now this is what we actually wanted to talk today. We wanted to actually give you the good side and the bad side as we always do.
Now, the thing about property management is that there was a situation that we were currently in. So if you want to understand the situation, you'd have to actually go back to the previous video that we posted last week. So we went into a deal and then there's so much that happened in that short space. However, we're still alive, man. We're still alive. And it's very important to actually understand every lesson that you can get out of here so that you don't find yourself in this situation.
Okay, so let me give you the lowdown, right? So now what had happened is that we went into this particular deal whereby there was a management company that was set in place. However, the management company was collecting the rent but not giving it to the person that actually needs that money, which is the property owner, right? So now what would happen is that if the management company does give it to the property owner, what would then happen is that the management company wouldn't pay the rates and taxes, right? So now this is a situation that you can easily find yourself in, whereby you are saying that, you know what, I have a management company in place, they will deal with everything from the well-being of my tenants to paying my rates and taxes to paying my bond payments, everything about the deal. I just only want what's left after everything, right? Only to find out that what was happening on the ground was something totally different. So now this is something that I actually wanted to touch on, that even though you might have a management company, you always need to make sure that you are the one in the forefront that's actually collecting the receipts if they did pay.
Looking at the management company, it's supposed to actually make life so easy. However, at the same time, they can make life so difficult. It's very important. I'd like to stress the importance of understanding the competency of your management company. Because now, once you're under a certain management company, you need to be very aware of their habits. You need to be very aware, are they paying on due time? Because now the thing is, if they are not paying, it's going to come back to you. Let's just say something does happen to you, and then you left your wife or your husband with these amount of properties. So it's very important to actually understand, because you do not want to find yourself in a situation whereby you lose your properties because you might have turned a blind eye, or you are like, you know what, they don't pay on time, however they do get them done, only to find out that now once you are gone, or once you are out of the picture, your family will be at the other end of the management company's incompetencies.
Yes, and I know as property investors, we're always saying that you actually need to negotiate with everything, right? But now remember, with your management company, these are the people that are actually going to be dealing with your asset. So you don't want to get the cheapest within the market, right? Because now the cheapest might not always be the most efficient, right? So now something that you must always do is due diligence according to that property management company. I think the first thing that I'd actually want to stress is that you need to interview multiple management companies, right? Interview multiple management companies. So what does this mean? This means physically going to their offices, physically going and seeing what kind of properties do they actually deal with, right? Because now sometimes property management companies actually deal with townhouses, and then there's someone that's within that property management company that say that they will deal with your freestanding, only to find out that they don't have the necessary experience with actually handling those kind of properties. So you need to make sure that the company that you are actually selecting to manage your company, they will be the one that will be able to actually collect the rent, pay everything that's actually necessary, and also deal with the grievances of the people that are living in that property.
So I just want to talk about the interaction that we had as buyers with management companies. Now, it was quite interesting. I mean, you go online, you find a property that you like, you actually put down the offer before you even put down the offer to purchase, because you want to do things the right way. You actually engage the property, you engage the management company or the estate agent, because the estate agent will link you with the management company. You engage them in terms of, I want to understand what is the rental situation there. So that's where you get insights of what is really happening on the ground, because now we don't just go into property investing in terms of that there's an estimated amount of rental that you can collect in this area, because you do not want to find yourself speculating with credit or your hard-earned cash. Speculating can be the last thing that you want to do. So you'd actually want to find yourself in a situation whereby you understand or you have proof, evidence of what has been happening in the past 3 months in that area, because what that's going to do, that can actually position you so that you know that these are your expenses and this is the income that you're anticipating. And in that way, that's when you can actually roll in a deal without having too much stress as a property investor.
So now, as a property investor, right, when looking at getting the right management company for your particular property portfolio, what do you think is that one element that people need to actually go out and view before they actually sign with that management company?
I think it's that, especially when you have access to the tenants, that's valuable information that you're sitting on, because the tenants can actually tell you how the management company responds to their issues. Because now, don't forget, now when you are coming as a property investor, that the management company will be at their best behavior because they want business. However, now the tenants have already paid. And the tenants have been with them through the most of time. It's like being in a relationship. You know, when you're in a relationship with somebody for 5 years, you know that person.
Yes.
However, when you're still engaging that person, that, you know what, man, how about we actually do something? You're still getting to know them.
I can see you getting in your mojo.
You only know them after some time. So I believe that, especially if you do have access to the tenants, that can be vital information that you as a property investor can gain.
And this is before you go into the deal, right?
Yes. Before you even go into.
And for me, my most important tip that you can actually take away from your management companies is that you need to actually have a contract between yourself and the management company. It can't be a verbal contract. We need to understand that what is actually going to be binding you and what's actually going to be binding the management company. The contract is basically to make sure that everybody is still on the same side. If we know that the management company is actually going to be taking out 8% and they are actually responsible for paying the rates and taxes, your bond fees, your holding, your maintenance amount, then that needs to be on the contract. If they only just collecting the money and then taking out their management fee, then that should actually be stipulated within the contract. That's my takeaway.
The thing about property investing, you cannot look at a management company and ignore your attorney, because I'm already thinking conveyance in my mind. Because let's just say, most of the time,